they've been up 80% for the year. The tech little bump that we had a few weeks ago is a little bit over now. And I think they've got a lot of room. We think that they're going to get to 400 in the next 6 months. Part of it is really the international subscriber growth. It's a lot larger than people realized. They got to 5.87 million instead of 4.48 million users. And that was a lot bigger than we thought. Now, there are headwinds on the currency side, but it was actually a pretty impressive showing.
Yes, the international subscriber number did seem to delight investors as well. Let's talk about potential other headwinds, though, if we had to. This line about investing in content going forward. Does that concern you, or do you think investors are pretty happy to absorb that, given how crucial content has been to the company previously?
I think the good news is investors have gotten a lot more sophisticated. What they realize is that content, the distribution channel, and the technology are really important to their success. And you can't do one without the other. And so the investment in content is happening all across the board. There are a ton of competitors that are going after Netflix, from Apple to HBO to Hulu. All these folks want to get in on the business. And there's only a room for a few players because there's only so much time you can binge watch. And I think that's really what it comes down to is you've got the right content, you've got the right network, you're in good shape.
Let's talk a little bit more about sophisticated investors that may be out there and whether or not they may be willing to take on this quite lofty valuation we're hearing that could come in an Uber IPO. I mean, we've heard reports it could be shooting for $120 billion in a valuation. Ray, what are your thoughts on that?
The markets have been super kind this year. We've got almost like $53 billion raised in about 200 IPOs. So it's a good year to go out. There's a $120 billion valuation on these guys. And I think they've done a really good job, weathering all these interesting issues, from CEO issues to the Saudi issue that's going on in the background. But I think the big thing is that they've diversified, right? They've been going after scooters. They've been going after motorcycles. They've been going after Uber Eats. And they realize that they've got to be able to do that in order to be successful.
Right, you mentioned the Saudi issue. Saudi has invested in Uber, of course, SoftBank, a backer as well, across the rideshare space. Do you think this has any prospect of hanging over the IPO? I know we are still waiting on more details around exactly what happened with Jamal Khashoggi, but what's your assessment so far, given what we know today?
Well, there are two things. I think the first part is we don't know what actually happened. And I think they're trying to piece together the details. So it does look really suspicious from where we're standing, but we're not sure exactly what those details are. But we are getting a backlash in the Valley. And that creates a very interesting situation as to how this IPO will play out, given the fact that it's a big chunk directly invested into Uber. There's a big chunk that was invested through the Vision Fund as well. So I think it's creating a little bit of a challenge. So we'll see what happens, but they do have to get out by the end of the year because I believe that's what the SoftBank requirement was.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.